I'm George Hall, Chris White, the DJ Resort. You're at the Round Table Podcast. Welcome to the Round Table Podcast with DJ Chris White, and the DJ on the ones and twos. Your source to knowledge. Follow me on Facebook and Instagram at the Round Table.
GG, I am DJ John Tavall, Lionel, Chris Ryder. We all did at the Roundtable Podcast, your source to knowledge. We got a special guest, Lionel.
You already know, man, live from New York, then at the Roundtable Podcast. We have a special guest today, stock market educator and investor and author of a book where we're going to talk about today, Mabel Nuñez.
Hey,
how are you today?
Welcome.
I'm great. Thank you for inviting me. I'm excited to be here with you guys. So thank you.
Yes, absolutely. I know, like, we've been trying to pull you in for a while, but finally we was able to get you on. Yeah. And definitely we're extremely happy to have you on, though. You know what I'm saying? So definitely, man. So welcome again, though.
Thank you.
Yes. And like John Tavares, like, been trying to get you on for a long time, like you said, and we're glad to have you. And welcome to the Roundtable Podcast, your source of knowledge. Yeah. We're here to spread knowledge about stock markets today.
That's right. But I mean, quickly though, sorry, Mabel, just give a little brief introduction. I know we introduced you, but just a little brief introduction about yourself, who you are, what you do. I mean, elaborate a little bit more.
Sure, yeah. So my name is Mabel, or Mabel, whatever you want to call me. I'm the founder of Girls on the Money. So basically, I run a company that teaches investing to mainly women, but I like to say people that are not represented in the world of the stock market. So typically, most of us, Hispanics, Blacks, and, minorities in general are exposed to the stock market from a young age. So I feel that it is my mission to teach people how to do it, and not only just do it, but do it the right way so that they can build wealth over time. So that is my goal with Girls on the Money.
Okay. All right. So, I mean, as you say that real quickly, I mean, the main question I always ask to people in general, which I know you're familiar with, what is the stock market? You know what I'm saying? What is that? Because again, I mean, they don't really teach us like this in school. Yeah, so can you just kind of like give like in detail as what is the stock market?
So the stock market is an actual market, but instead of selling like, vegetables or whatever, they sell pieces of companies. So the price of the companies, they vary because of supply and demand. So the more demand there is for a piece of a business, that makes the stock price go up. If there's less demand, it makes the price go down. So there's a limited supply of stocks in the market. And yeah, that's how you can think of it. It's just pieces of companies, is a market, and people are buying and selling every single day, Monday through Friday, when the market is open. So that is essentially what it is.
Oh, wow.
Wow. It's a buy, sell, or trade situation.
Yeah, or you can trade. Exactly. Yeah. It's just constant action, people buying pieces of companies all day. Yeah.
Yeah. And it's very important, like you said, especially in our communities, Black, Latinos, and minorities, we don't really get the education on what the stock market is and how to invest and what the proper tools are. And I'm glad that you started, you are the Chief Information Officer of the Girls on the Money, right?
Chief Education Officer.
And Education Officer. Where's your badge at, young lady? Let me see it. I want to see your credentials. That's great.
Oh, myself, yes.
But you also have the book, Stock Analysis 101, which is a step-by-step guide for people like us who don't really know how to go about investing or what the proper stocks are to invest in. And just to get a little bit more into your company, Girls on the Money. What is Girls on the Money? Like, what is that? What? Give us a brief description for our listeners and viewers.
So it's an education company. So I don't tell people buy this stock, buy this, whatever, buy this investment. What I teach people to do is how to invest on their own. I feel it's so important for people to understand how this is done hands-on, because when people start to invest, they fall into the trap of putting their money in things that they know nothing about, just because their friend told them to buy it, because their next door neighbor told them to buy it. And that is a very dangerous way to invest. It's like a gamble. So I feel that it is important for people to understand how to do their own research when it comes to stocks or, index funds or other types of investments. And my mission with my company is to teach that and to show that it's not hard. It's not rocket science. It's a very simple technique. It's just like a skill like that you can learn like any other skill. You just need to put the time in to learn it. So that is what the mission of my company is, to teach people how to do this on their own without having to depend on a financial advisor, depending on their next door neighbor, their friend. Learn to do your own research. That's something that I always emphasize.
Yeah, and listen, I admire that you're doing that, because I don't know if during this pandemic, you probably know about this. Everybody's been hip on the Robinhood thing, and their friends are telling them to invest in this, invest in that. And I had a big debate with a friend of mine, well, actually with a couple of them, telling them that you have to know at least something, a little bit of what you're doing. You can't just go in there and throw in your last $200, not knowing what the hell's going on, because you might lose it all, or you might end up not knowing what the hell's going on in the, overall. So you do have to have some basic knowledge in order to use the proper tools, right? Correct? Am I correct about that?
Absolutely, 100% correct. Yeah, people that buy blindly, it could go either way. You can make some money, you can lose it all. It's a gamble. So if you want to gamble, that's the way to go. Maybe go to Vegas, go to Atlantic City. Don't use the stock market to gamble your money. That's pretty much it.
Yeah, that's exactly what I was thinking. I told my friend, the one that I was just speaking.
Oh man!
I told him, I know you have to take a risk, but you have to take an educated risk. You can't just jump in there. Like if you're playing like CIO or dices on the block and think that you might just win off of the roll, right? It doesn't work like that, correct?
Exactly, 100%. You're on the money with that comment. That's right.
So on the money. I like that.
That Robinhood fever, that Robinhood app fever that everybody had was ridiculous. There's probably a few people that did good with it because they had a little bit of basic knowledge, but I just felt like everybody was just doing it because their cousin told them, or their next door neighbor, like you said, without really knowing what the hell they were doing. Oh, invest in pinto beans because they're gonna eat a lot of that during quarantine.
Right. So my question now,
well, that was
big. Go ahead, Chris.
No, I'm saying that was the big thing with with the Robinhood was the vaccines. Like investing in vaccine companies.
Oh, I heard about that. Yeah,
I had a couple coworkers who were doing the Robinhood thing, and they were trying to get me into it, and they were saying that you should invest in vaccine companies because that's what the thing is going to be, and the stocks are going to go up, and gasoline too, because gasoline was was real cheap back in March. So as the economy was going to start opening up again, the prices was going to start building up, and it was the time to buy stocks with like Exxon or BP and all that stuff, and Shell. It was like that was the time. So it was kind of interesting that you said that.
Yeah.
Right. That's true. And one thing I want to point out, though, and I want to ask you, though, Mabel, you could definitely elaborate more on this. Is there an actual science of really knowing how to sell stocks, or just kind of like you just said, do your own research and know what you're getting yourself into, and also understand that, you can't really expect a immediate return, in other words?
Exactly. Yeah, there's not an exact science when it comes to investing. If there was like a blueprint that, do this and you're going to make a lot of money, everybody would be a millionaire. Everybody would be wealthy.
Right.
There's no blueprint. And I think different things work for different people. I can only speak for myself and what has worked for me. I've been investing for 12 years and I've learned a lot along the way. So what has worked for me over the years is to invest in companies that are legit, that make money, that have strong brand names, that are leaders in their industry. Invest in high quality companies and just let them be. Leave them alone. Don't be checking your account every 2 seconds, or like if they go down in price, don't be selling because you freaked out. That is not the way to invest. That's like a very you're not gonna make any money that way. So if you focus on investing in quality from the beginning, you have less things to worry about. You can just let your portfolio do its thing, and during ups and downs you don't have to freak out, which is I experienced multiple ups and downs in the market, and because I know that I'm invested in quality, I have never felt like, oh my God, I have to sell everything because everything is falling apart. And that's a risk that you take when you invest in trash,
right?
That don't have any foundation. So.
That's true.
This is gonna be a great episode, man.
What do you think about penny stocks? It's a big debate behind, is it really worth it? Because you're talking about high quality, big brands, but how about people that, still leans towards like penny stocks?
Yeah, penny stocks are very famous because they're cheap. You can buy 100 shares for like 50 cents each or whatever. that is another gamble that I've never put one penny. Even when I started to invest, I started investing with $600, and even if I have limited funds, I never thought about buying penny stocks just because I could get a whole bunch of, shares. That is also a big gamble. Those companies, for the most part, first of all, they're not regulated. So something that a lot of people may not know is that most established publicly traded companies are under a lot of regulations by the government, by government entities. Penny stocks aren't regulated. Somebody can come up with some random company, create a stock, and just have people buy it for no reason. So that's one big risk. Most of them are like up and coming biotech or random things that are not established. They're not profitable. They don't have any cash on their balance sheet. They have a lot of debt, but people don't look into that because I understand they don't know how to look into that. But most penny stocks are just, I call them trash. Like, I don't have any other word.
Trash.
Basura.
They are trash.
So for instance, if you're a butcher and you start your own meat line and you want to sell them for pennies, that wouldn't be a good idea to invest in meat from a butcher that's known in the neighborhood, correct?
Exactly.
Okay.
And what happens with that? People hype it up like, oh, buy this penny stock, it's going to be the next big thing.
Yeah.
And either
buy those pork chops from that butcher. He's known in the city.
But let me ask you a question on this one though. So if I was to put a specific type of meat on the market, that was very fatty and high quality, I can trade that for a higher end, right?
Yeah, you can make up a story. You can make up any story you want for people to buy your penny stock. You get your money, you cash out, leave people that bought the stock up in arms because they're not going to make any money out of it. Yeah, you can make up any story that you want.
So Mabel, we're going to let you into the little inside joke there. So our co-host, Chris Ryder, in the lower left-hand corner, he's a butcher. So he's been doing hand-to-hand meat sales over the quarantine period. So we was wondering if perhaps we should throw it out. So we should throw it out in the open market.
That's true, though.
And then I always respond with Nelly Nell cutting him up and selling him as a high quality meat because he's very plump and juicy and he has a lot of quality that makes meat very good. So that's what I said, that if I was to put Nelly Nell on the market,
oh man, y'all are wild, man.
But Mabel, now going back to the serious note, because we like to joke around, Josh, around here and there, because we gotta have a few laughs, right, on the show, I like that John Tavares shirt, by the way, with the little baby blue black shirt there.
Baby blue, that's right, that's right.
What made you start a career in the stock market? Education, basically, like you kind of elaborate a little bit, real briefly, but let's get a little bit more deeper into that. Do you have like what made you start as a stock market educator?
So first of all, like I discovered the stock market when I was a senior in college. Like in undergrad, I was around maybe 20 years old. Before that, I didn't know it existed. Like I had no clue that there was a stock market.
Wow.
I took like one class in college that showed me this world. And I was just blown away. Like, you mean to tell me that an average person can buy a piece of Nike, a piece of McDonald's, a piece of Starbucks, and grow wealth that way? Like, I was just blown away. So I just became obsessed with investing. From that class on, I was just like, that was my hobby. I would eat, breathe. Everything was about investing. I would talk to random people about investing that I would just bring it up in random conversations. So so that was my obsession. And then I went to school with a degree in finance, and I wanted to start investing. And even though I graduated with a degree in finance, I was still scared of the stock market. I was still like, oh my God, like, is this legit? Like, if I open an account, is this really gonna happen? So it wasn't until like a few years after I graduated from college that I started to invest. And when I saw what investing in quality companies meant, like I saw my savings account was giving me pennies, and I saw my investment account giving me actual dollars, I was just shocked. And I decided that it was important to teach our people to invest, because we don't, I wasn't exposed to this. I'm sure like my, Caucasian friends from college, I'm sure they were exposed to this when they were in high school.
Oh yeah.
Meanwhile, like us, like we don't either. If we get exposed to it is through like the gambling type of investing, like day trading, penny stocks type of things, or we don't get exposed to it at all. So I felt that it was a mission, like a God-given mission to teach this to people the right way.
Absolutely. I'm glad that you actually, noticed that, I mean, obviously, you said you learned it in your undergrad years, but yes, I mean, it's very unfortunate that, you learn it as an adult, what I'm saying? Like, it's just crazy. And I always said this, I think we are definitely are conditioned to be consumers opposed to being, owning stocks, becoming entrepreneurs, because one thing I don't understand, people that actually have, like, even with, like, example, sneakers, have a federal sneakers, you buy so many sneakers, like, why won't you buy a stock of these sneakers since you buy so many sneakers? Make sure that money's coming back to you when you buy those sneakers. You know what I'm saying? But I mean, I'm great that you actually was able to see that, though.
It's interesting to say that, because when I was in high school, and I think your brother Jay will attest to this too, we had a semester where our math teacher actually had us, take, imaginary money and invest it in stocks that we thought that would, and then we would be checking the newspapers all the time, and we really understood at that point the value of that dollar, even though it was fake money. Some of us made some money, some of us didn't, but it was we were learning from that point on. And I know that wasn't part of the curriculum. She took it upon herself to try and teach us valuable lessons about the stock market and all that. And I think I invested in Nike.
Nice.
From what I remember, yeah.
Wow.
I invested in Nike. I made a little bit of money. I made a little bit of fake money, but I made a little bit of monopoly money.
But that's that's just like one example, perhaps. But I know that in the vast majority of the educational system, particularly the ones that we grew up in, they don't teach that in the schools. They don't teach you about entrepreneurship, how to make your own money. They just teach you, you got to go to college, get a degree, and then find a good job. That's it.
Yeah.
And and most of the time you don't end up seeing most of the money that you make when you find a good job, because you're paying off college debt.
Exactly.
So the stock market is a great way for you to, like, invest, like, here and there, to try to double your money, triple it, and then pay off your debt sooner.
And that's what I was telling him. I was having a conversation with my brother about that the other day too, because I was like, yo, you didn't go to college, but you put your time into something where you're actually making a lot of money, and you're not in debt, versus somebody who went to college for 4 years, have $100,000 in debt, and they went out and got a $60,000 job.
Very true.
Absolutely.
And you actually make more money than that person who went to college, just because you got into a trade that made you a substantial amount of money, and your debt is zero.
Definitely. And one thing, I mean, honestly, like with me, I had the privilege, though, to teach the stock market. I had like a 7-day unit with my students, which I definitely applaud my principal for allowing that to happen. Because again, there's something that wasn't taught to me as a kid. But a quick question: why do you think most people, I won't say most people, but some people hesitate to get into the stock market? Why do you think they kind of like, iffy with that?
Yeah, I think people either feel that you need a lot of money to start investing, which is false. People think that it's hard or it's difficult to invest, which is also a myth. And maybe they feel they need to have like a fancy degree, like I should have a finance degree to do this, or I should have like credentials to do this. Also false. It's 2020. Investing has never been more accessible than ever. Like most investment accounts don't require any account minimum. So if you have $50 and that's all you have to invest, you can open an account. Investing is free. You can buy stock for free nowadays. And it's just a matter of educating yourself so that you can know what you're doing. So, because it doesn't matter if you can open an account and you put some money in a stock. If you don't know what you're doing and you're losing money, what's the point? So I think the important thing is to educate yourself on doing it in a way that's actually going to generate profits for you.
Wow. That's true. Very true. And I mean, to follow up with that, though, I would say this, though, we're living in a different age now where you could actually trade stocks. I say socks. I'm thinking about pajamas right now, but literally in your pajamas and trade stocks now, because all these mobile apps that we have now, that you're able to do it at your own comfort at your own home, which is more convenient. I
mean, what are your thoughts on somebody like you think the S&P 500 versus a Robinhood app? it's more beneficial to just go straight to them instead of having like a different source to invest for you, like through their company? If you
So Robinhood is like an app that allows you to invest. The S&P 500 is what is like the financial name for the stock market.
yeah.
So for me personally, I am on the camp of learn to do this on your own. Do it on your own. You're probably gonna have, if you do it the right way, you're probably gonna do better. You don't have to pay crazy fees. You don't have to like pay like a percentage of your wealth or your money to an advisor. Even though I'm not against financial advisors, I just feel that people need to do their due diligence. You don't want to get somebody that's selling you products because they're making commission out of it. So you want to be very cautious. And even if they're making commission, you want to make sure that you're also making money, because if their only mission is like I need to get my commission every month, and they don't care about your investments, that's a risky position to be in. So you want to do your due diligence. If you do want to go with an advisor, that's I'm not going to be against that, but just know that there's ways that either you can do this on your own, educate yourself on your own, or there's other methods that don't require you to pay like crazy fees for somebody else to manage your money for you.
During this pandemic era that we're going through, is there a few particular stocks that you would recommend our listeners and our viewers to invest in that are low risk but might turn out to be a good return for them?
Yeah, I typically don't like to tell people buy this, buy that. That's a very because if something happens, they're like, oh, you told me.
It was Mabel's fault. Culpa de ella.
Yeah. So what I like to say is buy companies not because it's a pandemic and whatever. Buy companies because you feel that in the next the next 3 to 5 years, they're still going to be around. They're still going to be good businesses. I like to buy leaders, like number one leaders in their industry. I'll throw in like an obvious company like Clorox. Like Clorox was around 100 years ago. It's probably going to be around in 100 years. And it was pretty popular during this pandemic. Like buy quality because it's quality, not because something's going on. Like there's no way to time the market or like predict, this stock is going to do good or whatever, because things are always changing and there's no way to predict what might happen next. So make a list of companies that you consider to be leaders that you are familiar with, like number one leaders in their industry or close to being number one, companies that you feel are still going to be around in the next 3 to 5 years. And also take some time to maybe look a little bit at their financials. It's not hard to do. I know like people are like, oh my God, financials, it sounds like so hard, but it isn't. Like apps like Yahoo Finance, for example, they give you like, if you go into the financials tab, you can see like if they make any money, if they have any cash, if they have any debt. All of that is free information that you can take a quick look and see what's going on. And it's like I use Yahoo Finance all the time it's on my phone. So it's just like simple things you could do. Just like think quality. Don't think things that you don't know nothing about, things that somebody told you to buy. Don't go that route.
Yeah. So I mean, what are your thoughts then on investing in commodities? Like like potatoes and like stuff that people use every day, metals, gold, silver, stuff that people use on an everyday basis.
Yeah, I mean are you referring to like options like that? There's like, are you referring to companies that make potatoes, or are you referring to like
Doritos, like what, like a big company?
No, the actual commodity. So there's ways that you can invest in gold, like stocks in gold, right? Correct. Or in metals.
Yeah.
Are those the things that you would advise people to do? Is that something that, or do you rather, or you think it's best that you invest in a company who actually manufactures the gold or mines it rather than invest in the actual metal? Is my question.
Those are very those type of investments are more for like, I wouldn't say like more experienced, like sophisticated, like investment banking type of investing. Like if an average person, like if I'm including myself, if I'm an average person trying to invest in like metals or commodities, like you said, potatoes, manufacturers and stuff like that, that could get very tricky because I'm not going to know what I'm doing. So that's like more like sophisticated, like more advanced. So even for a beginner, I wouldn't recommend any of that. And I know people hype up gold a lot, but if you look at the history of like how gold has performed over time, yes, it goes up during like times of challenges in the market, but it always lags stocks and other type of equities. Like you have to look at the history of those type of investments. I've been hearing about gold since I started to invest, and it hasn't really done much. It goes up like during like a season, and then it just lags for the rest of like the next 5 years. So like, yeah, you have to like understand what you're doing when you're looking into those type of things. Like if you are an expert in commodities, yeah, you have an advantage. Maybe you can make good decisions, but like me or like, you know, an average person, like trying to figure that out, it would be too complicated.
So it goes back to what you were saying earlier. Then it's always good to invest in companies who have a solid brand that you know are going to be around for a long time, that are household names, that you know they're not really going to be affected by anything that's going on in the world, in the sense, or they are, is very minimum. So yeah, so I like that. I like the answer, because I was going to follow it up with what are a few myths and a few things you want to debunk, and you just did it right there with the gold.
Well, you got me second thinking, because I'm actually investing in silver. Okay. I bought some shares on silver.
Oh man, damn,
for the simple fact of currency. I mean, it was just a little gamble I took, you know. But you know, it's you know, that could be a valid point though. So that really brings my question though. When it comes to like investing decisions, does that really vary depending on your age, your status of income, if you're a homeowner? Yeah, if you're married or not. I mean, it's all also depend on your certain situation.
Yeah, it will. What I like to say always, first of all, like if you want to invest, like don't just jump into investing. Like you have to set a foundation. Do you have an emergency fund? Do you have money in the bank that if something happens, you can tap into for an emergency? Like if, you know, people say 3 to 6 months of living expenses. It might sound crazy. So maybe start with like, you know, a few $1,000s. Do you have that saved? People that are like in deep consumer debt, like a lot of credit card debt, no savings at all, you shouldn't be investing. You should be paying off your credit card debt, saving money
1,000%,
and then you upgrade to investing. Like there's levels, you know, you cannot just jump into it. So
right. I know so many people like that. That's why I'm laughing right now, because they go in so much debt, but they're not even like I'm thinking right now. Yeah. Get rid of that debt before you start investing, though. You're right about that.
And it's not to shame anyone. You know, we all have different financial situations. Just know that in order to do this right, you have to take those steps. Like, you know, clean up your finances first before you take that step, you know, towards investing. So that's, you know, it's no shame or nothing. It's just like, you know, do it the right way.
Absolutely. Baby steps. And I'm glad that you're expressing that to our listeners and our viewers, because a lot of people don't know the step-by-step situation. You know what I mean? They think that, you know, just because everyone else is doing something is all right to do it. And I imagine that you explained that in your Stock Analysis 101, Brooke, the step-by-step guide, right, to invest and how to make money in the stock market. Yeah. And get rid of your debt first, man. Get rid of Sally Mays. Get rid of that Capital One. You know, and,
I mean, credit card debt for sure, though, because that's like huge, aside from student loans.
I would say, the student loans you can pay off, you know, whatever, slowly or whatever. Focus on the consumer debt, which is the credit card that you know, it's aggressive. It's like 20% interest, crazy, you know, ridiculous.
Oh my God, it's highway robbery with credit cards. Highway robbery. I always said that. Oh man. So I mean, you know, again, far as like your whole idea of investing and doing that and educating people, what really made you really empower women though? You know, I know you kind of briefly said it, you know, in the introduction, but you know, what really made you really empower women?
Yes.
So, as far as finances and investing. Mm-hmm.
Great question. So when I first started to invest, the person that taught me to invest, first of all, was a guy. He was my coworker at my corporate job that I had back in the day. He sat next to me and like he taught me how to invest. Then I would, you know, I was obsessed with it. So I would bring up this conversation with my female friends or, you know, my girlfriends in general. And they will either look at me like I was crazy, like, what do you mean you own stock? Like, that's like unheard of. Or like, they would think like, who does that? Like, you know, it was so weird to like.
They were like, what eyeshadow are you wearing? What eyeshadow are you wearing? What's the lipstick?
Yeah, it's like crazy. Like it wouldn't even like cross their mind to invest. So, and most of the conversations that I had were about stocks and like the stock market. So I felt that there was a need to get more women educated about investing and getting them participating in the market. So that's pretty much what was the main reason. Like it was mostly guys that I would talk to about stocks. So
do you think it's because of the culture though, how we're raised though, that has a lot to do with that? You know, where they make, go ahead.
Yeah, it could be like mostly the men take charge of the money in households or in relationships or whatever for for the most part. So maybe it could be that, yeah.
Ah,
but
wow.
Time to change that ASAP.
Wow, I'm glad you're actually doing that though, because honestly, that's a great way to really empower females. Because I'm really pro of really empowering women and minorities in general though, because I obviously feel, obviously I feel that, it wasn't designed for us to really understand, money and how money works, especially when it comes to investing. But it's great to know that you're actually, you got your own company, you wrote a book about it, and you definitely are doing a lot of numbers though. You definitely making a big impact. I've been following you for a while. And I mean, kudos to you though.
Thank you.
Definitely. I mean, Chris White, a little quiet over there, man. What's going on? Any
No,
stock questions right there?
Nah, I mean, it's been kind of, I've just been listening, soaking in all the information.
Taking in the information. I hear that.
I do have a question though. What do you think about Bitcoin and all the rage with that?
Great question.
Great question. That's another gamble. I've never put one penny of my money on Bitcoin. It's just, people need to understand the reason why Bitcoin was going on is, again, the topic of supply and demand. Like back in 2018, I think it was, like everybody and their mother was talking about Bitcoin. So that was making the price of Bitcoin like go up, like, it balloons, and then it dropped, and now it's like kind of lingering back to its, whatever. Do you know what you're buying when you're buying Bitcoin? Like that's the first question that you should ask yourself. Like, do you understand what it is about? Like, to me, it's a gamble. I would not put any money on Bitcoin either. Sorry for the Bitcoin fans out there.
Because I always thought that the conception was that Bitcoin was supposed to be the new currency. It was like supposed to take over money, and everything was supposed to be bought in Bitcoin instead of cash and everything like that.
That's the story.
So that's what the rage was about Bitcoin.
Yeah, that's the story. There's always a story. We just don't know if it's gonna happen or not. It's just based on prediction. Like if you want to buy stuff based on maybe what will happen in the future, then yeah, but just keep in mind you are gambling your money. That's all you need to keep in mind. If you don't mind, if you're just using like play money, that's one thing I want to say too. Like if you're just using play money to buy penny stocks, to buy Bitcoin, to put into like Forex, whatever that is, okay, it's play money. If you play money means that if you lose it all, you're not gonna care. But if you're putting like thousands of dollars in these type of things, you better, be ready to like, face the facts when, things starts to crash, which most of the time that's typically what happens. So that's all, just have your play money on the side if you want to do those type of things.
Okay. Now for our viewers and listeners, what's the difference between a stockholder and a bondholder? Like, because I actually learned about that a few years ago. I really didn't understand that concept though. When you're a stockholder opposed to being a bondholder. So what's the difference though? The significant difference between those two terms?
That's a great question. So a stock, when a company wants to raise money to, create products, services, build a building somewhere, they issue stocks to the public in order to raise money. So they issue pieces of their own business to the public, and they tell, with the understanding like, hey, we're a good company. We're going to do everything we can for the price of your stock to go up because we're building products and services that are going to improve our company. So there's no, you're just giving them money with the hopes of your stock going up. There's not really a responsibility there of like, okay, if your stock crashes, I want my money back or nothing like that. When it comes to bonds, it's a little bit different. It's more conservative because the company has a law. There's a rule where they have to keep their word. So if they tell you that you buy your bond and in like 10 years it's going to go up by 5% or whatever, that is legit. Like it's going to happen. Like that is
so it's guaranteed.
It's guaranteed. Yeah,
it's a guarantee. It's a guarantee.
So it's like
I get that.
So it's more conservative because it's a guaranteed. We're gonna pay you your 5% in 2 years, whatever, because it's a bond. But when it's a stock, there's no guarantee. So that's essentially the difference between the two.
So it's like almost like a 50-50 though, right? Because say if you're a bondholder, right, you lend out money to a company, but they skyrocketed, they went off the roof. All you're getting back is the money that you lend out and the interest.
Exactly. Wow. You got it. That's exactly what it is. That's why it's like it's safer because your money's safe. You're going to get your 5%, but then you don't benefit if the stock skyrockets. So you got it.
Right. Wow, so that kind of it's still a gamble though, right? Because you don't know what's going to be the outcome though. But I mean, you have an idea, you're taking a chance though because you're still lending out money, but you're going to get that money back though, regardless, right?
Exactly.
Right.
Yeah. With the bonds, you do. With the bonds, they have like a level of responsibility. With the stockholders, like the shareholders, are at the bottom. So if the company goes out of business, the people that own the stock typically don't get anything. Their stock goes to zero and they don't get anything. But if you have a bond in the business, you have a more priority of getting your money back and getting your interest back versus owning the stock. Got
it. Now, I know we spoke about this a little briefly, but is it always a time to like sell your stocks though? Because sometimes, I mean, I'm gonna speak for myself though. Sometimes I get a little itch of, trying to sell it, or should I just kind of fall back, wait a little bit? Like, what would you, I mean, I know you don't want to give like a direct advice though, but usually what would you do?
That's a tough question for a beginner investor that has been investing for 2 days versus like 20 years. It's a difficult question because we never know what can happen to a stock. So let's say that you have a stock in your portfolio that has been doing really well and you've made a lot of money on it and you want to sell. Yeah, you can sell, but the stock can continue going up. And then what happens is that people get mad, like, oh my God, I sold at $300, now it's at $1,000. What did I do? So it's like a tricky situation. Like if you're satisfied with the money that you've made already and you're good, whatever happens, like if the stock continues to go up, you're going to be okay. If it crashes, you're going to be happy because you got out. But there's no way to time it. There's no way to know. So I would say when people invest, maybe go in with a goal. Like let's say, if I buy this stock, I want to make 20% or 30% of my money, and then I'm going to get out. You can go in with a goal, but just know that it could go either way. Like the stock can continue going up, which happens. If it's a good company, it happens all the time. But yeah, it's a tricky. And maybe you need the money for something, you want to cash out.
So yeah, it's crazy. It's crazy talking about that because all right. So let's say you have a company like Under Armour, because Under Armour is a pretty new company, like the last I think 10 or 15 years. So when you have a company like Under Armour who's just starting out, let's say they stopped being private, they started trading their stocks. So now you invest your money in Under Armour when it's brand new. There's no way of knowing whether it's gonna go up or down. But you're an investor who puts $10,000 in that stock right away. You're patient. 15 years later, Under Armour is huge. You just ended up being that $10,000 ended up making you shit ton of money, and now you're like, and that's the beauty of the stock market is like getting into those companies before they blow up. That's the tricky part. Am I right?
Yeah, that's very tricky. That's why I don't do that because like you said, things can go either way. I like to wait for the company if the company is going to be good and you think it's going to be good for the next 5-10 years, you can buy it at today's price and the price will continue to go up. Like I'll use an example. Like for example, in 2014, I was looking at Amazon. In 2014, Amazon was $200. To me, that was expensive. And then it went to 800, then it went to 1,000, then it went to 2,000, now it's at 3,000.
Wow.
So if you think a company is going to be good, don't focus on the price. Focus on what the business is about. You think it's going to be here in 5-10 years? That could be a good investment. That's why it's tricky to focus on the price or like if it's up and coming. Don't think about that because that's going to be very like tricky to figure out.
That's very true though because.
And it was crazy about Under Armour because it was a company where it's like it's Nike, but it's not quite Nike. It's like in the same vicinity as Reebok and all those those sports apparels. But Under Armour was something that nobody really knew.
Right.
But now if you invested that money, you walked away. Right now, if you cash out, you're probably upwards of a good amount of money. And it's the same with something like Lyft and Uber. Before they blew up to where they are now.
Yeah.
That's true. Now, if you say Under Armour, I'm gonna use an example that Chris Ryder just used right now. You think now that they're up and coming, but if they sign a very elite athlete, do you think that should be a good way for you? Let me jump on it now to invest in this company because they have this athlete now that signed under their company that could boost up their stocks. I'm just thinking out loud right now.
That's a good question.
If you think about it, that was the way it was with Nike and Jordan back in the 80s. Nike was an up and coming company. There was, they didn't really have. They were I think tennis shoe at that point. And then Michael Jordan's a rookie in '83. He comes out, you know, he wanted to sign, I think, with Adidas or something along that lines. And then, you know, he ended up signing with Nike, and then whoever invested in Nike at that time, a year later, they're, you know, balloon.
Yeah.
Wow.
It's true, but I'm glad you guys brought that up, because I would never ever invest in any stock just because like a famous person, you know, bought stock in it, or because a famous person is going to partner with it. And I'll give you a recent example.
Yeah, I want to hear this.
When Kanye West talked about whatever he's doing with the Gap, and people ran to buy Gap stock. Gap has been struggling for years.
Yeah.
They're not profitable. They have been struggling. The fact that Kanye West is affiliated with them maybe was good for like 5 minutes. It doesn't matter. Like, don't like look at the business like inside. What's going on inside the business? Is it a good business? Is it making money? Does it have cash? Look at those factors. Don't ever make a decision just based on some athlete or some affiliation, because that's going to be good maybe for a month, maybe a few weeks. It's not sustainable. So I wouldn't recommend going that route ever.
It's very rare that it's Michael Jordan, because, you know, Nike is where it is now because of Mike.
No, but I get
it. What I was going to say is, where they was without Mike.
It's good that you told that to our listeners and our viewers, because the vast majority of people, the masses, right, they tend to follow trends because they see an icon or a celebrity supporting something, and unfortunately, that's how society works. So I'm glad that you told that to our listeners and our viewers. Don't follow a particular brand just because, you know, Jay-Z said that it was good. You know what I mean? Like, or Kanye, because people get influenced by that. And that's why these companies pay these celebrities so much money to, you know, basically sponsor them to see if they can push some pennies out of us, right?
Exactly. That is exactly it. Like, there's always a marketing situation behind it that people don't know. They don't know what's going on behind the scenes. So yeah, don't base decisions on that.
So to follow up with that, what are some common mistakes that investors make? You know, from your, you know what I'm saying, from you investing for, I don't know how many years. I mean, I know you've been doing it since 20 years old, but I don't want to say your age. I don't know.
12 years. But I would say, first of all, buying things that they don't understand, because like we talked about the whole interview, like just because somebody told you to buy it, things that are, you know, cheap and that maybe could turn into something in the future, don't buy it. Don't buy things based on that without doing like your due diligence and your research. Stay away from Bitcoin, stay away from penny stocks, stay away from Forex. I don't have a way to sugarcoat this. If you want to build real wealth, like actual wealth, like, you know, like I'm talking about real money, don't gamble your money into those type of things. Like, yeah, you can make some money here and there. Like, you know, I put money in Forex, maybe I made a few $100, whatever. It's not sustainable. It's a gamble. Like, I feel like it's my mission to tell people, like, don't waste your money in those type of things. Like, most of them are either scams. They don't go anywhere. Like, it just, you know, just don't do it. Like, learn how to invest the legit way, buying real businesses, or, you know, maybe index funds, stuff like that. It doesn't sound exciting. It doesn't sound fun. And like, oh my God, like I own this biotech that's going to blow up in 10 years. It doesn't sound fun, but you're not investing to get excited. You're investing to make money. Like, you know, you're investing to build wealth. So don't get caught up in those type of things. That's what I would tell people. Those are mistakes that are made early on when you're a beginner.
Wow.
Yeah, like basically, so don't invest just to show off in front of your friends. Yep. Oh, I own a part of Nike. You know what I mean? Exactly. Oh, you see that cup that you're using right there? I own a part of that company, of that cup that you're using, just to show off.
Man. That's good. That's good. You gave those pointers out to our listeners and viewers, though, because I want to ask you about technology, because you talked about biotech just now. And I mean, what do you think about like driverless cars? I mean, because that's what I'm investing right now. You know, I'm just speaking for myself right now, and I'm pretty sure, you know, listeners and viewers, some of them actually got some shares in driverless cars. What's your take on that personally?
Oh, I think it's an amazing industry. I feel like it's changing the world. Like, there's leaders in the industry, like Elon Musk, like they're changing the world. It's amazing. But just keep in mind that there's the technology, there's always competitors behind the scenes. Like, you know, Toyota might bring out their own driverless cars. Apple's was working on the same thing. Google was working on the same thing. So there's always, you know, there's not just one company. But I would say in those situations where there's too many competitors, see if there's like a number one leader. And if there's not a leader, there's ways to like maybe invest a little bit in those different companies that are in that industry, or maybe if you want to put some money on it and you think you're putting your money towards a company that you think is good, that's amazing, because it is a transformational development. I'm all for it. I'm just like, since there's so much like, I guess, competition or people trying to do the same thing, I've been like skeptical of the whole thing. But
okay,
yeah, but
basically just do your research, make sure that things are gonna work out for you. And sometimes even if you do your research, sometimes things that might not work out the way that you think they are gonna work out, right?
Very true. Yeah, it's never an exact science. Yeah, that's why you don't put your money in one company. You diversify, which means you're putting your money in different stocks, different companies. Don't ever put everything. Yeah, you don't put your eggs in one basket. Like
right.
Yeah, I mean you.
Very true. Definitely.
Yeah,
that's
so
a great point right there.
yeah, just gotta just continue to drink your water, reinvest in your dividends, and mind your own business. I like that T-shirt.
My God, I love the T-shirt, by the way. Love it, love it,
man.
love it.
Thank you. That's what I do all day, every day.
Get out of here.
What's the motto, Mabel? The motto is live, save, and invest, right? That's
exactly
the motto. The girls on the money. So we gotta follow that model. But let's talk a little bit about your book real quick. Hold on. Let's get into that real quick. So we can get our listeners a little bit. I mean, I don't want you to give them the whole inside scoop because we actually want them to purchase your book. But let's talk about Stock Analysis 101. What are a few key points that would interest readers to actually buy your book?
Yeah, so that's actually my second book, and it's more specific. I have mini lessons for stock market investing. Mini lessons for beginners was my first book, which is a more general view of the markets. But this one is great because it's very specific. So for people, like I've been emphasizing in this whole interview, like do your research, do your due diligence. What this book does is that it explains to you how to analyze a stock from beginning to end. Like if you like a company and you're thinking, oh, it could be a good investment, but I don't know, I want to look into the financials, I want to look into different metrics. The book spells that out, like what metrics to look into. And it also tells you where to find it. So all of this information, for those that don't know, for public companies, all of their financials and plans, all of that is free. It's on the internet. It's 100% free. All you have to know is where to find it, and you have to find it from the credible resource, not from like some random website that you found. So the book tells you why you need to look into, where to find it, and how to understand it. Because I could just throw in some random terminology, and you're gonna be like, what is she talking about? So I kind of like dumb it down. I explain it in simple terms.
That's great.
And I teach you where to find it.
It's basically stock analysis for dummies, basically. And I mean, no, not for. I mean,
the polite way though, right? Title of the book.
I made it because they have books like that. But what I'm saying is, nowadays, we know that people are very lazy. Even if they have the technology in their hands to look for something, they just don't look for it. They're more focused on social media and what's going on, and in these reality shows, Love and Hip Hop, the Kardashians. But you did the job for them. You put all those pieces together for them, and you gave them the puzzle already done, so that they don't have to do that anymore. So, there you go. Definitely buy Stock Analysis 101 from Mabel Nuñez. You're definitely gonna get a step-by-step guide.
Absolutely, and I'm glad
your money right in the stock market.
Absolutely, and you know what? I mean, there's so much information out there, as you guys just said right now, but especially in books. And I think a lot has to do with people not reading, though. You know what I mean? Like a lot of people don't read. That's just the hard fact.
That was exactly what I was trying to say. That people don't take out the time to research or read. But when you have somebody like such as yourself that went out there and did all the homework for them and put all the pieces together, it's a little bit easier for them not to have to navigate through different websites and worry about, unfamiliar sites. You already did that for them. So let's get this book up and selling.
Absolutely. I mean, again, though, kudos to you, though, Mabel, honestly, for what you do, though. Again, though, because honestly, this is something that, unfortunately, is not really taught in schools. It's not part of the curriculum. But, people like you, Mabel, that are able to really, still find a way to promote this and really educate, people, and especially when it comes to females, I definitely got to applaud that. But I mean, speak about your seminars though. Like, I mean, I know you did some seminars, or I mean, how does it like? I mean, how does it work? I mean, can you elaborate with that though, with your seminars? I mean, is it different now because now with the whole pandemic thing?
Yeah. So I have so my flagship course, which I've been teaching for like 5 years, is a 6 weeks class about stock investing. So pretty much what I teach in the book, I kind of elaborate more on the class, and I work one-on-one with the students, like help them make a list of quality companies, help them, teach them how to research them and invest in them. So that's like 6 weeks. But some people don't have like the time or the patience or the time for that right now. So I have like a kind of like a crash course type of thing, which is 2 hours. The next one is actually next Monday. And this one is about like, just like, if it's very like step by step, like understand how to open an account, how to make a list of quality investments, and how to start doing your research. So it's kind of like a condensed crash course on stock investing. So that's like the workshop part of it.
Yeah, and
Okay.
those workshops are definitely more in depth because you get to spend that one-on-one with the person who's taking the course. And some people need that. Some people learn better through reading. Some people learn better through visuals. That one-on-one, situation definitely is great. Where can a person go get those workshops that you offered? Is there? I know you have a website, but can you elaborate a little bit more on that so that people who are lazy, they don't like to look at websites, they can listen to this podcast and be like, oh, this is where I need to go see this or do this seminar.
So the easiest way to find me is on Instagram. So it's at Girls on the Money on Instagram. And from there, and same thing on Facebook. If you type in Girls on the Money, my group is going to come up and stuff like that. That's the easiest way to find me. And on those platforms, I tell people when the workshop is, or when, when the next one's coming up, or what's going on now. So that's the easiest way to find me.
So yeah, there you go. There you have it, folks. The next time you're watching World Latin Star, you can just go to Girls on the Money.
World Latin Star.
You know what I'm saying? World Latin Star, funny videos. You can just go straight to Girls on the Money on the Instagram, and Mabel will have all the updates for you there. That's great that you're doing that. I'm actually interested. So you might see me in one of your future seminars. So no te haga como que no me conoce, okay?
Men are welcome. That's another thing. Like, I get guys telling me like, oh, can I join your class? I'm a guy. I'm like, yeah, of course. Like, it's for everyone. Like, sometimes I'm like, maybe you shouldn't be Girls on the Money because
it's not sexist, right? It's not sexist.
No.
Okay.
Guys are welcome.
Because I would have easily dressed up as a female. I would have put some high heels on, a wig, some nice glasses, and some lipstick. I would have gone like, hey, girl, I'm here for Girls on the Money. What's going on?
Don't need it. No,
and then you would have noticed the way that I walked. I couldn't walk in heels. Is he really?
Oh, man.
Is that a man there? But yeah, God. So I was already thinking about that. So thank God you cleared the air because I was gonna go over there dressed up.
No. It's cool. Come as you are.
Investments.
Oh man, but I mean, again, though, we definitely appreciate what you do, though, because again, man, people need this type of education, though, because unfortunately, as kids, we're not really taught this, so we definitely applaud you once more for that. We had the clap effect, in our usual studio, we had the clap effect, so we will actually do it right now, but definitely we applaud you for that.
Oh, the clap effect is ready. Go ahead, keep on talking there.
Oh, you do? Oh, shoot. I mean, let's make it happen, baby. Come on.
I'm excited for this.
It's funny because when we had the clap effect more available, John Tavar, co-host, that's like his thing. Like he's like the clapper guy. He claps.
Yeah. The record is 8. So you're about like 4.
Who holds that record though? I forgot who holds it.
Oh God.
She got a couple claps today. I was
definitely. But real quick though, Mabel, would you agree with this? If more people realize that owning stocks is really like owning companies, will you think more people will be more willing to invest and get more involved in investing companies because they feel that they're part owners, so to say?
Yes, absolutely. I think that's been one major thing for me as an investor, like buying pieces of companies that are like really like big and like international and number ones, and like thinking of myself as an owner. And even if you own like 1 share or like 10 shares, it doesn't matter. As long as you own a piece of that business, you're already a part owner. So I think it also links to your mindset. Like if you want to have like that mindset of wealth and or getting there, like that's definitely a huge component of it. So don't ever think that you need to buy, oh, I need to, have all this money to invest or whatever. In this day and age, that's no longer necessary. So you can start, with $100, whatever you have, and then grow from there. So yeah, having that mindset of being a part owner, that's been major for me, and I'm sure it'll be a huge thing for people that start investing. So great point.
Okay, no, that's why I asked you.
100% very true. Yes.
What do you think of like other investors that became very successful as the Warren Buffett's? People like that though. I mean, did that definitely influenced you, inspired you? Did you learn a lot from what they did, what they accomplished?
From where you mean, like the big like Warren Buffett type of thing?
Yeah.
Yeah. Like I like to, when people tell me how do I invest, that's how I invest. Like I'm like a boring investor. Like don't come to me for exciting like penny stocks or all this type of thing. That's not me. I'm very like, I buy stocks which are allegedly considered risky, but they're really not if you're buying good businesses. So, and holding on for the long term. So yeah, I definitely look up to like Warren Buffett, Peter Lynch, just a couple of like big investors that, have created, overwhelming wealth through stock investing or other type of investments. So yeah, I definitely consider them like role models. My dad is my role model. Like he taught me like the basics of personal finance. Like he didn't know how to invest, but he taught me how to save money, how to don't overcharge your credit cards. Like he told me like the foundation of personal finance, and that's obviously that's where you have to start in the first place. So
right.
Yeah. That's great, man. That's great that you had that those tools at home to start you off in that path, because a lot of us, especially first generation kids from from immigrant parents, our parents, they're used to like living day to day, trying to make ends meet just to survive, and they don't really show us the concept of saving. And we basically learned that when we're basically on our own. When we move out of the house, we're like, oh shit, like mama's not there anymore. Dada's not there. We gotta save. And and then so it's good that you learned that firsthand. Not everybody has that opportunity, and I'm that was great that you had that opportunity at home. So
yeah, definitely. And I'm glad you actually pointed something out that I want to make sure I don't forget this. It takes patience, right? Like you can't expect overnight money, which again, it's like expecting a return on the day you invested on the stock and expecting a quick return right away. So you would say it definitely takes a lot of patience. Will also comes with discipline, though, right? Would you agree with that?
Oh yeah, those are two major things with investing. Like you have to, you say have the patience when the market is going crazy one day. You cannot freak out and sell your whole portfolio, because if you do that all the time, like where are you gonna get? You're not gonna get anywhere with that. And also, yeah, like, you have to give it time. You have to give your investments time to grow. That's, like I said, you're growing wealth over time. I'm not saying you're gonna grow wealth in the next month, the next year. It's over time, and you have to have a little patience for that. And that's another thing that people struggle with, and I completely understand. But it's just a matter of like kind of training yourself to be that type of investor.
I got a tough question for you right now. Now you're saying that. Ready for this?
Don't do it, John Tamar.
What would you say though? Because honestly, there's people that really feel as if they're better off saving in a bank with a CD interest compared to buying stocks. How will you counter that?
Oh my God, man! Please tell them, Mabel. Please, how horrible the percentages are.
Oh my God!
Bank investment.
Yeah, banks, especially brick and mortar, like the bank that you have down the street from your house. That it's nice, it's convenient. You can just walk down there, use your ATM. They're not paying nothing. They're paying 0.01% interest. And yes, your money is 100% safe. If you had $100 yesterday, you're gonna have $100 in the next 10 years. It's not gonna move. And that's why they don't pay you anything, because the safety is 100% there. But with stocks, yes, there's risk. You have to pay for that risk by being patient, by not freaking out when the market goes crazy. But you can see returns of 30, 40, 50, 500% if you invest in good companies. Like, that's the trade-off. Like, are you willing to take the risk of buying those stocks and then just being patient and not like freaking out, versus okay, maybe you want to be able to sleep at night and not worry, but your money's going to stay the same for the next 10, 20, 50 years. And when you retire, the same $100 that you had like 40 years ago is actually going to be depreciated, because there's something called inflation that $100 today is not $100 tomorrow. It's more
Okay.
like
Yes, yeah.
$90 in
Yes.
40 years. So that's another thing that you have to consider.
That's a major difference.
Yeah, so no freaking out, ladies and gentlemen. None of this. None of that. All right, we gotta stay patient and let the money grow.
Yes,
right?
amen to that. Absolutely.
No slicing and dicing around.
You heard that, Chris?
Yes. Yeah. You gotta be.
Oh,
man.
man.
That's, and you know, everything in life is about patience, but particularly when you're dealing with your finances, you know your livelihood basically, right? Because if you have a particular money saved out and you invest 75% of that into the stock market, you have to be patient. You can't expect it to just grow overnight, like John Tavar and you just finished explaining. But yeah, man, people just have to be more aware of stuff. That's all.
Yeah, absolutely. You know, and I do like, I mean, you know, we do understand that we just said too, is that, you know, we understand the economic circumstances too, though, you know, where people, you know, that's their mentality because they want to get that quick buck. But, you know, once you really understand the stock market, you know, again, it takes patience. One thing I've learned, I'm gonna speak from my personal experience, is that it fluctuates, right, Mabel? It fluctuates as far as like the prices. How would you compare what's a correct price and what's a fair price when it comes to stocks?
There's like some formulas you can do on the back end, which I'm not gonna get into because I have nightmares from like grad school when I have to
hit me. I'm an optician, so I love formulas. Those are nice glasses, by the way.
Oh, thank you. Thank you. There's something called the PE ratio, which I don't know if you guys want me to get into that because.
Okay, yeah, you're not speaking on language. I don't know what that is.
Yeah, so that's a metric.
Off it that way.
That's a metric that you can use to determine if the stock is undervalued or overvalued. But to be completely honest with you, I do not. Those things don't make or break my investment decisions. Like I always go back to, is this a good business? Is it making money? Is it going to be here in 3 to 5 years? Those are like my top 3 questions that I ask myself. And then if I want to dig deeper, I look into other stuff. But first, ask yourself those questions. If you get positive answers, you can start moving forward. If the answers are no, like I don't know what this company is about. I don't know if they're making any money. I don't know where they're going to be in 3 to 5 years. Maybe it's not a company you should be putting your money on.
Right. Okay.
Yeah.
All right. Definitely get that. I mean, I was just like pondering right now. I just had to hit you with that question. So
basically,
I didn't know the answer to it though.
Your share price over your earnings per share, you know, like, right?
Yes, you got it.
Yeah, so you go. So I know a little bit. I'm not that crazy. I'm gonna end up in that seminar talking to you a little bit.
Oh man.
I definitely encourage people to definitely seek the information, seek help. You know, we're not born knowing everything, and if you know, we're making the information available through Mabel Nuñez that she's out there to help people invest. So definitely take advantage of the workshops, man, and get out there and get informed. Get knowledge on things that are going to help your financial future. If you have kids, even if you don't have kids, if you just want to make your life better, it's great to know these tools, you know?
No, absolutely. And again, though, I think it's not designed for us to learn about these tools, as you just said right now. Yeah. And I mean, this is why that, you know,
it's not designed, but what happens is when we have people like financial experts like Mabel, who are actually coming back to give that information to the communities that you came from, that's where it counts. Because most of us, not all of us, but a lot of us make it out of these communities. We learn the information, but we don't come back and share it. And that's where the problem is at. So the fact that you came back to share it with us, we love you for that. We appreciate you. And you just won the Live, Save, and Invest Award of the Year. I swear.
Save and invest.
Very excited for that. Yay.
He just made it up. I swear to God, he just made it up right now.
No, I mean, listen, I'm a spontaneous dude, man.
He just made up an award.
Nah, but it's the truth, though.
I'm gonna send it to you via UPS to get me the charges.
You know, it was crazy because this morning I was talking about like my son's saving account, and I was like, I want to buy him a stock right now. You know, or a number of stocks. That way, when he turns, 18, because he's only 10 months right now. He's 10 months, but that's one of the things that I want to teach him about is the value of stocks, the value of money, the importance of money, and the fact that I want him when he turns 18 years old that he could come into an account where he's able to have a step up where I didn't have it. And I struggled, for a long time because my parents didn't set me up for the future. And I definitely want to make sure that he has stocks and he has a savings account. That way, when he's 18, whatever he wants to do with it, he can do with it.
Yes.
But I want him to know the value and the power of the money. And that way he has an advantage, and that way he's good, and that's how you build that wealth, within our communities, making sure our children, they know the value of the dollar, they know the value of the money. That way they can pass that down to their children, and it's better for everybody.
Yes, and the earlier you start, like, and it doesn't take. I actually have a post on my blog about this. Like, if you put $100 a month, like just $100 a month, by the time he's 18, he's gonna have like, I don't want to make this number up, but it's gonna be like $30,000, $40,000, $50,000 just because you invested $100 a month. So it could make a huge difference. Like, a teenager, and he can go and do whatever like you said, whatever goals he has, he can go pursue because you build that up for him. So that's an amazing. I'm all in for getting kids investing, even if they don't understand. Like my nephews, they're like 1 year old and 3, and I've been buying them stuff since they were born. Like, because eventually I want to explain to them what this all means, and that comes with us. Like, we have to do that because we didn't get that when we were young. So
right, very true. I think as parents though, as Chris Wright was just saying though, I think definitely it's your responsibility to save your children from your personal experience, so they don't have to go through what you went through. And honestly, I always said that, most of the things starts at home though, your environment though, what you've been exposed to. So yeah, you guys are right about that. Definitely. I agree with that. I have a quick question though. Mabel, are you interested in buying any stocks for the Roundtable podcast?
We're going to be a publicly owned company, Jay? We're going to be selling stocks?
We're gonna blow. Yeah, we're gonna blow. Okay, we're gonna blow. Trust me, you're gonna make a lot of money with it.
I gotta do some research. Send me that information. I'll get back to you.
Oh man. So yeah. Well, honestly, again though, I'm glad that you're here. Definitely gave me some great pointers. Again, that we need this type of thing. But what I want to just leave it off with is just basically a final thought. Hold up. Our co-host that was calling us right now. But go ahead. Chris, you want to ask any of the questions before we have to?
Well, actually, being inspired, if you saw me kind of looking away, I bought some stocks.
Oh wow, nice.
Yeah, they're low level stocks, but I figured I'd buy.
What do you buy?
I figured I'd buy some stocks. I was actually trying to get into it. They're just starting out. I bought a couple shares of General Electric and a share of Fitbit. They're not trading much right now, but I figure starting off at least with something small. That way, like you said, it's best to start off small. That way, if you lose the money, you lose the money. It's not really gonna hurt.
Yeah.
So I figured I'd do something like that.
Okay, cool.
It's like $23, but it's a start. I definitely want to actually move up into like buying some Apple, some Nike.
You can. What app are you using to invest?
I was using Robinhood.
Okay, so Robinhood has a feature where you can buy fractional shares. So even if you don't have $300 or $3,000 to buy Amazon or Apple, you can still buy the stock. You can buy a fraction of it. So I would recommend looking into that so that you can already get invested in those companies. You don't have to wait, or you don't have to think that you need to have all this money. So those apps I like because they have that feature of fractional shares. So look into that, and like whatever company that you like, Apple, whatever it is, you can still buy it. You don't have to wait, to have all the money there. So.
Okay.
Yeah, so that's pretty interesting that to find that out. I'm definitely gonna look into that. I definitely want to have some shares in Apple and Nike, and because you definitely gave some really good insight about trusting in established companies.
Yes.
So I'm definitely those shares are kind of expensive for me right now, but the ones I bought from Fitbit and General Electric were only $6. But
don't limit yourself. Don't limit yourself. That's what I'm saying. Like, buy fractional shares. If they're expensive, don't worry about it. Like, don't limit yourself to buying things because they're cheaper. Don't think about it that way. But you're already on the right mindset when you say Apple, Nike. You're already thinking like an investor. So I like that.
Mm-hmm. Yeah.
Wow. Well, I'm glad that you actually definitely giving those pointers though. Again, though,
I was
absolutely.
inspired.
Oh man, but listen, baby, we appreciate you coming on the show. Get at the Roundtable podcast. We usually do this final thought. We just give our final thought. It's basically an overall thought about what we spoke about. We usually have our guests come last as far as like a final thought. So I'm actually going to start it off. What I'm saying, when it comes to our, the whole topic, investing, stock market. And I would just end it like this. Is for me, it's that the best investment is the investment, to yourself. Where you got to think about your well-being, think about your circumstances, and that's the best way to invest. And I definitely, have to really, say this in the most, I emphasize this the most. I don't know how I really emphasize this, but when you invest, always know you're doing it for a purpose, and just be patient. Understand when it comes to this, it just takes a lot of, discipline. And, we got to really break out of this whole mentality of just being consumers and know that we have options available for us. So I'll leave it like that, final thought, my part.
All right, Chris Ryder.
Yeah, definitely. In the last, I would say about month and a half or so, we've been definitely having these episodes of empowerment and financial. We've had financial advisors, stock market advisors on the show. We're definitely trying to build the wealth within our community, so that way we have a seat at the table, and we know that we bring true buying power, because there's nothing more stronger than a minority dollar. It's already been proven. And then the first step is to, have people such as yourself, Mabel, to come on the show and show people that there's an avenue and an educational foundation that they can go to better themselves. And I think we have to stop worrying about how we look in Gucci and Prada and start investing in something that, we can look at and have money and bring it back to us. Because if you like those companies, invest in them. Invest in them. Put money in there. That way, you're getting that money back from people who are buying their products. The most important lesson to me is teaching my son the value of the dollar, the value of money, the value of stocks. I got inspired and bought 3 stocks today. I'm definitely going to take Mabel's advice, because I've been looking into buying stocks for a while, but I just didn't know, where to go, how to do it, and I've been wanting to, invest in that myself. And I definitely got inspired by Mabel's teachings and her advice today of, looking at the established companies and that's the best way. Yeah, and I think that my most important lesson is to teach my son the value of it. And that way, when he's 18, he has a better, opportunity for himself, and he'll know the value of these important lessons, and he'll be good. Whereas I wasn't good, and these are lessons that I learned in my late 20s and early 30s that I wish I would have learned when I was 17. And I just, it's pretty good. So that's my final thought. Financial empowerment, buy some stocks, invest in yourself, and let's get our communities up and up, baby.
That's right.
So yeah, man. So to me, real quick, I just want to salute Mabel, aka Mabel Nuñez, for being a strong, independent woman, and learning the things, the proper tools, and educating yourself to become the person that you are today. Thank you for coming back to a community-based podcast like ours to help spread the awareness of how the stock market works. My final advice would be just to do your research, understand what you're getting yourself into, and like Girls on the Money say, live, save, and invest, right?
Yeah, that's
And you're our guest. We're going to leave you with the final thought.
awesome. I loved all of those. That's great, guys. Thank you. What I would say is, if you can afford the product, you can afford the stock. Like John was saying earlier, don't focus on just being a consumer your entire life, buying making companies rich, when you can make yourself rich by buying stock in those businesses. So think of yourself as an investor. It's okay to buy nice things. Like, I'm not saying don't buy nothing, just stay in your house and buy stock. I'm not saying that. I'm saying it's okay to buy nice things, but also think of yourself as an investor, not just as a consumer. And also that in this day and age, is the year 2020, it's never been easier to invest. It's free. The platforms don't require any minimums, so you can start with whatever you want. And don't think that you have to save up $5,000, $10,000 to start investing. If you have $100 right now that you want to try out in the markets, you can use that. And then you can build from there as you gain more confidence and you start learning more, you add more money. And that's how I started. So start small, build, educate yourself, build that up. And then next thing you know, you're going to be, 10 years from now, you're going to be very happy that you took the steps today. So there's never been a better time. So that is my final advice.
Man, we need a clap effect right away, right now. that was tough right there. That was tough right there. That was tough right there because, like what you said, if you could afford a product, you could afford the product. Oh my God, that is so true.
You guys can hear it?
I hear it. Thank you.
Oh my God, man.
It's the clap effect.
The crowd is going wild. The crowd is going wild, Mabel. She hit him with an uppercut.
Thank you. I'm so famous.
But yeah, man, listen, man, the Nothing Wrong Table podcast, your source of knowledge. We like spreading awareness, but we also like to have fun,
I love that.
Be here like some Humphrey Bogart. We like to have a little bit of laugh, but we also like to inform people, and definitely we take this serious, even though some of us don't on the show, Chris Ryder. But we do take it serious. And thank you for coming to the show, and hopefully we can have you back on again.
Yes.
And I will be dressed as Mrs. Doubtfire in your seminars.
Sounds
For I'm hitting your head if you're not paying attention to me, okay?
Don't worry. I'll remember you. No problem.
Yeah, for sure, man. But this is the Nothing Wrong Table podcast live from New York every Monday at 7:30 p.m. through YouTube Live. You already know what it is, man. Everybody
make sure you click and like and share and subscribe to our YouTube channel, man. The Nothing Wrong Table podcast.
Yes, man, for sure, man. Right in the right-hand corner, in the lower corner, we got a little logo there. It says The Nothing Wrong Table podcast, just like the one that John Tavar has in his back. The one I have in Chris Ryder, just press it, bing, and you subscribe. That's all it takes. It's a bing, and you're good, right? All right, guys. See you next week, man. Coming on the show. Peace out.
Tráeme la que está bella, tráeme la que está bella, tráeme la que está bella, tráeme la que está bella. Let me la chapa busna, let me la chapa busna, let me la chapa busna, let me la chapa busna. Tráeme la que está bella, tráeme la que está bella, tráeme la que está bella, tráeme la que está bella. Let me la chapa busna, let me la chapa busna, let me la chapa busna, let me la chapa busna. Tráeme la que está bellaca, yo no le suelto la vaca, yala, aunque se saca. No me enamoro de chapa, dame la barata, sí, pa' yo desbaratarla, sí. Mejor ni cobrarla, porque sabe que el tiempo conmigo se gasta, enrolando y se mata, se tosa y se pasa, vuelve y se pasa, di que no fuma, pero yo la tengo aquí en otra galaxia, contrato con la NASA, convertí la luna en mi casa, si me ofrezco una pata, manín, yo le digo allá, donde que tú haya, toque tu haya, en su coro hay pile semilla, y yo soy la papaya, voy a ganar mi raya, fumando ganja, tú no puedes hanguear, tus pulmones no aguantan, tráeme la que está bella, 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 let me la chapa busna, 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 tráeme la que está bella, 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 let me la chapa busna, let me la chapa busna, let me la chapa busna, let me la chapa busna. Ella me dijo que quería rapar, como con yo la iba a rapar. Ella me ve enseguida mojar, sabe que yo no ando con chota, sabe que donde yo estoy es chota, sabe que nunca le quedo cortar. Ahora esa amiga me quiere setear, con otra amiga que quiere grabar, quiere fumar, ¿dónde tú estás? Yo quiero, ey, por la mitad, ponte a rolar, me pongo picar, porque yo vivo around de tira el blon, pica el malón, llegan los mon, que viverón, como está presión, pero lo botó, porque no quiero caer preso. Y rolo otro, que calentón, que calentón, que calentón. Rolo otro, que calentón, que calentón, que calentón. El rolo otro, que calentón, que calentón, que calentón. El rolo otro, préndelo, pásalo, préndelo, pásalo. Tráeme la que está bella, tráeme la que está bella, tráeme la que está bella.